Hey guys, it's July 29th, Thursday. So let's look at a couple of charts. We'll go back the last couple of days. So this is a 10-minute Russell chart. Let's look at, we actually made a newer version of the kill zone. So it looks a little bit different. The code behind it's exactly the same, but um, the prior version we divided the numbers on the right. So now it'll extend a little bit more. And you have the option to change the colors um, when a move is starting, like yellow, and when a move is ending, blue. You can change them any color you want. So looking at this chart, let's go back and we'll see that we had a contraction here. Yellow bars, big move starting. Okay, we're about 606 on the Russell. It ran up out of the contraction. The next day it gapped up, had a blue bar. That was the high of the day. Indicator's high, meaning big move is over. And we're always looking at the market continuously. We're not just looking at just today, or because what will happen with that is when the day is brand new and the market opens, there's only one bar on the 3-minute chart, so there's really no way to trade that. And we don't really want to look at the last 10 bars. We want to look at the overall pattern of multiple days. So this blue bar is ending this move. Okay, so it just happened to be right at the morning first 10 minutes. So from this high, the market had a correction down into our buy zone, gapped up the next day, so we didn't really get that entry. But the pattern is still there, so we know we're only going to scalp long on our smaller scalper charts. And the 10 minutes are medium chart, so this gives us a good direction. We had blue bars here. We did break the blue bars later on in that day. This is a good example of we have a rule of 10-minute blue bars for the high or the low of the day. It's usually very substantial. So we're not really looking to trade a breakout above that for that day. It went up a little bit more and then it came right back down at the close. So we had this contraction. Even though the market was going up, it was contracting. Yellow bars, big move starting. Okay, it started, so contraction, yellow bars, expansion, blue bars saying that the move is most likely over, look for a correction. Okay, so this is a good example of what we call the blue bar false breakout. Again, just like this blue bar high, we're not really looking to go long above it. So it gives us a good gauge on the market, or it gives us odds intraday of what we should do. Now the pattern is still up, so we don't really want to go against that pattern. It's just any long trade would be considered higher risk because we made this blue bar high. So in no way is this a short signal. It's an exit your long signal. It's completely different. So here's an example of a false blue bar breakout. It goes up, it breaks it, and then it comes right back down. So there was a minor correction pattern right here with the second long signal, but again, we wouldn't really take that based on the blue bars. We'd be looking more just to scalp it in the bigger direction. So we'll keep following the charts. We did have this level on the ES and the Russell as an important high. Off of this high, looking for a contraction or a basing action. Even though it's at the top of the pattern, we call it basing, where the market is just basing going sideways. Okay, so this is where a lot of people lose money, is especially when it's basing, because you're trying to catch it too quickly to the downside. You might be looking at the market saying, well, it went from this low at 605 up to 670. It has to come back down. And it's a valid thought, but in real time, you might be saying that same thing to yourself here, here. So it's not really a good way. It's a good after the fact thought, but it's not any way, we can't use it real time. So we want to wait for the contraction. We want blue bars, or actually yellow bars, big move starting, contraction is going to break. Okay, so off of this break, you could scalp it short. And then we had a minor sell signal here, which would be the second set of reds. Okay, about 654. It came down 646 on that day. So there was some opportunity there on this short signal. And there was a more of a major sell signal today, right here on this red bar. So the key though is we have, even though we're coming down, right? We're still correcting this last move up. So that's why we're looking at multiple days and weeks worth of charts, because it's always waves within waves. So this was a very important level that was hit today. We can still go lower because we're still in that correction, and we're looking for more of a complex correction, which is choppy. So our outlook from this high has been correction choppy, and the difference of that is we're not really looking for home run trades because the market's going to be in a correction to the last move. Okay, so there's some support here. There's also some support lower. So without making this video too long, we'll look at the 60-minute chart, and we'll look at this, and we'll see that so like you can change the colors, whatever color you want. So here's the 60-minute chart, and you'll see that the indicator is high. We have blue bars. Okay, that means that this move down is most likely over. Okay, we also had them up here. So this gives us odds on the 60-minute that this move is coming to an end. Okay, we also had some targets. So this is why we always want to use multiple time frames for bigger odds. You'll see the same thing with this low down here. Okay, market comes down, blue bars. This move down is most likely over. Okay, is it going to pick the exact bar? No, it's going to give us a range. Blue bar's big move is starting. This should actually be yellow for the new version, but so it gives us a confirmation off of what we're doing. So on this pullback, blue bars, this retracement's over. There's our long signal to look for it to extend. So blue bars, look for it to correct. So that's kind of how we're looking at it, breaking it down. See you guys tomorrow.